It's time for Money Power Politics. The Dow climbed more than 300 points today, while U.S. crude fell more than 7% after Iran's strike on U.S. airbase in Qatar. A ceasefire, though, could take some pressure off the oil markets. But a lot of people are keeping a close eye, of course, on the Strait of Hormuz, which Iran could decide to shut down. If a ceasefire doesn't hold, it would be disastrous for the United States, for Iran, for China, for basically the world. A quarter of the world's oil and 20% of the world's liquefied natural gas passes through this narrow waterway. If it were closed, it would cause oil and gas prices to soar. Joining me now to discuss this and more, Justin Wolfers, a professor of economics and public policy at the University of Michigan, and Bharat Ramamurthy, former National Economic Council Deputy Director. Bharat, it's sort of amazing to me, even before the ceasefire announcement from the president, the markets did not seem exceptionally worried about this conflict. What do you think about that?
Yeah, I'm a little bit confused by that, and I'm not sure what they're seeing. As you said, some sort of disruption in the Strait of Hormuz potentially jeopardizes about 20% of the world's supply of oil. That means a significant spike in oil and gas prices here in the United States. And it's important to remember, and we lived through this during the post-pandemic period, when those oil prices go up, it's not just your energy bill going up. It's also and the prices at the pump. It's also the case that airline tickets go up because jet fuel prices go up. It's also the case that trucking costs go up, agriculture costs go up, and so it's one core cost in the economy that ends up spreading out into a number of different areas that hurt consumers and hurt businesses. And so obviously there's some uncertainty right now about what the ultimate resolution of all of this is going to be, but I think that it adds a significant amount of uncertainty to what is already a very uncertain situation given the tariffs and everything else.
Justin, what do you think? It was so surprising to me today that the market's reaction to the conflict over the weekend really seemed so muted.
It looks like this time the markets were right though, Steph. If they plummeted at the beginning of the day and then we got the news throughout the day, then they would have undone all of that. And so sometimes markets are a little bit smarter than the rest of us. And maybe this time they saw that Iran really wasn't going to kick back. You know, if I read the markets correctly right now, they're saying, how are things right now? Not that much worse than before Israel invaded Iran.
Bharat, the president earlier today actually put out a social media post warning against oil prices going up. The president doesn't actually have any control of that.
Yes, that's correct. And I'm very familiar with that from when I worked for President Biden, because he would warn companies all the time not to raise prices, and it didn't have quite the effect that we all hoped for. I think one thing that's important to add to all of this is the impact on the Federal Reserve. I think for a lot of folks, the key pain point in the economy right now is high interest rates. And if you looked at the Fed's minutes from the last meeting that they had, a lot of Chair Powell's statements, a lot of it was about a pause in the rate reduction cycle because of all the uncertainty in the economy. At that point, they were focused on the impact of tariffs and how that would flow through to higher prices. This just adds to the level of uncertainty, and I would imagine is another log on the fire for the Fed to keep interest rates where they are. And I think that's a big concern, not only for the state of the economy, where we already see some softness in the labor market, and we don't have the benefit of lower rates to offset that.
But just think about that. It was 1 week ago that the president was putting enormous public pressure on Fed Chair Jay Powell to lower rates, just days before the president potentially knew that we were going to strike Iran. And that strike creates so much uncertainty, and oil prices could spike. And then the Fed would have even less dry powder if we would have lowered rates last week when theoretically we didn't need to. Justin?
Steph, are you looking for a little bit of coherence from Trump's perspectives on the Fed? You might be looking in the wrong spot, mate. So far, he has one rule. When Trump's in power, interest rates should be lower. That's it. When Biden was in power, he thought they should go the other way. Now, I just want to point out one problem with that rule. I know of one other world leader who's had that rule. It was Erdogan in Turkey. Erdogan loves low interest rates, appointed a loyalist to the central bank, and very soon saw inflation skyrocket to 85%. So the president's instincts here are those of a developer. They're also not those of an economist, and they're not those of someone who's measured. if he were to have Erdogan-style instincts, and he does in many dimensions, then there are very serious inflation concerns in the longer run.